Oh my goodness, hold the phone. Jason 4 is doing a realist news video. With all this excitement in cryptos, Jason 4 goes where he needs to go. And I'm sure a lot of people are real happy that I've been focusing on nothing but cryptos over this last week with my newfound brother from another mother. You may know him as a trader boss. But yeah, I mean, imagine if I didn't focus on these cryptos over the last several days, and this guy's giving me calls and telling me, yeah, go ahead and tell your people. That's fine. Tell them. Get them on to a live chat. Boom. Oh, here's a tip. Go for this one. You know what I'm saying? Do you know how much money people probably just made in cryptos by me spending a significant amount of time strictly focusing on these videos over the last several days, right? But I do want to get back into a little bit of the new stuff, right? Some things we need to keep on the radar. So here we go. It's all from Zero Hedge. Weekend reading. Recession risk is hidden in the tax bill? What the? Recession risk hidden in the tax bill. Authored by Lance Roberts via realinvestmentadvice.com. Speaking of real investment advice, I don't give investment advice per se, but how them cryptos looking? Whoa. And I'm not even talking about crypto madman, the boss. I'm talking about even before that. Cryptos from January till now. My goodness. Anyways, that's whatever. I'm not even gonna go there. Let's continue. I want to talk about crypto. It's hard not to talk about cryptos. Let's look. JSNIP, focus. Use the force. Look at the poster of Cliff High. Use the force, JSNIP. All right, Cliff. I got you, baby. I got you. Since the election, equity bulls have been pinning their hopes on tax cuts as the needed injection to support currently elevated stock prices. Stocks have advanced sharply. I can't help it. Guys, it's punching me in the mouth. Stock prices have advanced sharply? Compared to what? Compared to the Great Depression? The bubble burst of 2000? Tech bubble burst? The 2008 crisis? Yeah. Oh, yeah, they have advanced. Compared to cryptos? You're on a different planet. Excuse me. Stocks have advanced sharply since the election on these expectations, and while earnings have recovered primarily due to the rise in oil prices, whatever economic growth was to come from tax reforms has likely already been priced in. For some background on our views, both Michael Lebowitz and I have been discussing the tax bills as they are currently proposed since May of this year. And he links several of the articles where they were covering it. Buy the rumor, sell the news. We are currently in the second longest economic expansion since World War II. While Republican lawmakers are betting on jump-starting economic growth, the problem becomes the length of the current liquidity-driven expansion. All economic cycles end, and we are already closer to the end of the current expansion than not. However, Patrick Watson over at Malden Economics recently made a brilliant observation, and to wit, he says the gap between the gray line, potential GDP, and the red line, actual GDP, represents unused capacity. You can see what we had a lot of it at the recession's 2009 depth. The gap slowly shrank since then, and now it's closed. Great news, right? Yes, it is, but don't celebrate just yet. Actual GDP can't stay above potential GDP for long before bad things start happening. He says this chart proves it. Let's take a look at this chart. Okay. It'd be nice if I saw some dates in there, but that's okay. We shall continue. We see here how GDP moved along the line below its potential since the 1970s. Notice that each time the green line went above zero, a recession, the gray bars, began soon after. Soon can vary, of course. GDP ran above potential for extended periods in the late 90s and 2006 and 7, but in both cases, intense downturns did follow. Plus, the Fed wasn't tightening as it is now, which suggests the current expansion is at least approaching its endpoint. While the Trump administration and congressional Republicans suggest their tax changes will stimulate years of economic growth and more will pay for themselves. The reality is likely quite the opposite. What investors are missing is that while tax reform could well provide for a modest bump to GDP growth, that growth bump is being offset by the Federal Reserve tightening monetary policy by lifting interest rates. Don't forget, the reason the Fed lifts interest rates is to slow economic growth, to quell inflationary pressures. Furthermore, as the brilliant minds at the Committee for a Responsible Federal Budget penned recently, the tax reform legislation will likely bring back trillion-dollar deficits by 2019. And they said, if they aren't careful, we estimate legislation under consideration could bring back trillion-dollar deficits by next year. Even under current law, deficits are likely to reach almost $600 billion this year and $700 billion next year. By our estimate, a combination of tax cuts, sequester relief, and other changes would increase deficit to $1.05 trillion by 2019 and $1.1 trillion by 2020. Of course, a trillion-dollar deficit would require further debt growth in order to fund the revenue gap, as the debt levels continue to expand, estimated to hit $30 trillion over the next 8 years. The impact to the economic growth will continue to be negative. While with the Federal Reserve already in the process of reducing their balance sheet, with the rest of the world set to follow, the primary support of the markets is quickly fading. This elevates the risk of a policy mistake by the Fed, and as Doug Cass has noted Wednesday, the risk of a congressional mistake has also risen. He says history shows that if the Senate version is adopted and the corporate tax cut rate reduced is delayed for another year, the odds of recession are greatly increased, a position that Art Laffer has recently publicly taken. The biggest mistake made by the Reagan administration was to delay the corporate cuts by a year, as the Senate version does. Companies waited a year to expand capital investments back then, causing a recession in 1981 and 2. Just something to think about as you catch up on your weekend reading list. So, interesting. Again, our Congress, they don't know what the hell they're doing. They never do. They never get it right. Oh, we made a mistake. Incompetence. Oh, no. Just bail out, fix this, right? And the banks always win. But see all this news? Remember the days. I've said this. Remember the days when Noel Snippy said, guys, I kind of long for the days in the future where I can just come out here and say, here's some freaking good news. Here's something that's really cool. Check this out. Instead of, oh, here we go again. Oh, the debt's going up. Oh, that's a problem. Federal Reserve's doing a terrible move over there. The banks got bailed out, over here again. That one failed, And strangely enough, with cryptos performing the way they have been lately, it's so much better I'll be honest, it is so much better and more exciting talking about that stuff. But again, news is news. You got to keep people up to date with what's going on. Realist news, got to keep it real around here, baby. So, take care.